Hello and welcome to this May 20th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're doing a chart of the NASDAQ, looking at a 3-year weekly chart. So each one of these candlesticks represents 1 week. I think it's natural anytime the market starts going through a negative period. Probably the biggest or one of the most frequent questions I hear is, when is it going to end? How low can we go? Those types of questions. And while there's never any kind of an answer that you can give that's a guarantee, I do find it interesting sometimes to look at the possible patterns that are setting up and to go from there as far as trying to determine what we might see over time. Now, there's a couple things that has transpired over the course of the last, let's call it the last several months, that I think could affect the market going forward, maybe for the next several months. The biggest one here is, as you can see, prices continuing to move higher on this weekly chart. Notice that the MACD did not break out to a new high. We simply just went sideways. So that, to me, tells me that in the longer term, we have lost some of that bullish momentum that we saw off of the bottom from back in early March of 2009. As we were continuing to move higher, you can see the MACD turned back actually in late 2008 and continued rising all the way up through about the latter part of 2009. Then when we got into early 2010, you can see that we actually broke to new highs with a lower MACD, and then once again in April, when we put in our highs, we did so with a MACD that was not at new highs. So anytime I see something like that on one of these charts where I see negative divergence develop, I'm starting to think about a 50-period test. In this case, because we're looking at a weekly chart, we'd be looking at a 50-week simple moving average test, which right now the 50-week is down at 2159, and we closed the NASDAQ on Wednesday at 2298. So that would still leave us about 140 points, or roughly, I don't know, maybe 6.5% or so of additional weakness possible just to get back down to that level. Now, looking at the patterns themselves, I think one pattern that I'd be kind of interested in here would be a possible head and shoulders. We've got a neckline where we come back down the left side, touching the 20-week moving average, move to a new high. This could be a head that's gone in. This pullback here on heavier volume could be making its way back down toward this neckline area around 2100 to put in the right side of the neckline. Then perhaps one more bounce up to maybe test the declining 20-day on a move to the upside, and then perhaps a break. If that were to form, and if we did see that break, this measurement would actually measure back down to about 1800 to 1850. And as you can see, there is an untested long-term price support area right at about the 1880 area. So I think that this is a viable pattern. It could be forming here. Certainly something to keep an eye on. If we break below the 50-day, or excuse me, the 50-week, I would be looking at a possible right side of a neckline that could be going in. So definitely keep an eye out for that. The other thing that I find interesting is throughout this uptrend, as we've moved up and the RSI climbed back above 50, notice on any weakness we have seen that RSI 50 area holding as support. Also on the weakness, take a look back in 2009, middle of 2009, a little bit of weakness, a little bit more in October of 2009, then even more into January 2010, and then the volatility and weakness has really picked up here over the last few weeks. So the market is in a difficult position here. It's broken down below some key support levels, and now what I would be looking for is maybe this 50-week moving average test in order to reset this negative divergence that is formed. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestEdCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.